Well, good morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here for the next little while. Hold on one second here while I get you my monitor. The market's just opened up. For those of you new to the trading room, welcome. I'm going to give you a really quick overview of what you're looking at here. This is the diversified trading system, and it's diversified because we're looking at the market from 3 different points of view. Here in the top left, we have the Hawk Micro Scalper. Here in the top right, we have the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. This is the Raptor. And the Raptor actually incorporates elements of the other 3 trading tools all into one trading system. And I'm on the lookout here for a buy signal. And don't you dare run away on me now. Hold on a second here. We got one here on the Hawk. Here's a first micro macro cross on the Falcon. Come on, or on the Hawk. All right, what I'm going to do is I'm going to explain what's going on here in a moment. I'm just going to see if I can't get a trade put on here. All right. All the signals develop the same way regardless of the tools. When a signal first prints, or when part of the parameters of the signal first print, we get a warning dot, and when all the signal parameters are met, we get a triangle and a hash mark. That tells us that the trade is ready to go. After that, it's decision time, and we need to decide whether we're going to take that trade or not. The reason I was anxious to buy is the market opened with a huge gap to the downside, and it looks like we're going to get a pretty good run. This first micro macro crossover signal here on the Hawk, this is a very strong signal. Oh, come on, you guys, don't retreat too much here. I wanted to get it off the Raptor too, but the Raptor had already triggered. The first micro macro cross is essentially the signal that occurs when the micro line, that's this thin one, crosses the macro line, and everything comes into sync. So we have green bars, a green filter, green trend lines, and a green signal, of course. Now these blue dots that you see here, this is our stop strategy. Currently I've got it set for parabolics. So let's turn that back on. The parabolics are managing my trade, and actually we're getting a red bar or a 4-arrow consolidation signal now also. And you can see this tool here on the right, this is called the Trade Manager. It's actually allowing me just to take a trade based on my parameters. Okay, now we're getting a red bar buy. Oh, and that's into yellow bars. Hold on a second here. Let's see if we can't get something else going on. Oh, no, that's going to come back with a red bar buy. So a red bar buy, another one of these signals that we're looking for in the Hawk. Oh, you stinkers. You got away on me there. All right. We got a lot going on here this morning with the NASDAQ. Oh, by the way, I know I'm focusing on the NASDAQ here, but I'll take a look at any market that's of interest to you. We can take a look. Also, I'm following crude and gold. This is a little bit more of a crapshoot kind of trade that I've just done here. It's the failure of the green bar sell, and I know everything is unfolding rather quickly here this morning. I will take a little bit more time to explain some of these things. Now, the whole point of using the Trade Manager for my trades is that it will limit my risk exposure on all my trades. Regardless of where I place my stop, it will never allow me to risk more than 2% of my trading capital. So even if I do get stopped out on this trade, where we've got the market kind of floundering here at the moment, I can take heart that I haven't risked more than I can afford to lose. So it looks like we're going to get tagged here to the downside in a moment. Not to worry though, we'll get another chance at this one. So as unpleasant as getting stopped out is, it's not the end of the world when you've maintained your risk. All right, that's a very important thing to learn. Mimo is asking, can we take a look at the DAX? Absolutely. Hold on, I will load the DAX onto another chart and we'll bring that over here for you. All right, so here on the, I'll take a little bit more time to explain these things now. And I apologize if I confused anybody out of this morning's opening flurry. Most of the times I'll give the market a chance to settle in a little bit before I get too anxious trading it, but I just had a feeling it wanted to rally right out of the open given that first opening range gap. So let's take a look here on the Falcon now. The Falcon, we're going to concentrate mostly on this trend line when we're trading the Falcon. We want our signals to be in sync with the Falcon. This was our trend change signal that occurred right here. And it happens when the trend line changes colors, so we go from green to red, and we generate a signal where everything is in sync. Now, you don't see a warning dot here. What happened is the warning dot would have been absorbed. The warning dot did print here for a moment, but then the signal parameters changed and it went straight into signal mode. So we get the warning dot, the audio alert telling us there's a possible trade brewing here. And then we get the triangle hash mark that tells us that it's decision time. We can set up to take the trade. Can I risk it above the high? There, I'd probably do something like that. And the market fell off quite nicely, finding our first profit target. Okay, now they're coming back. You see the trend line starting to change color again. So it's gone from red to green. Now we're getting, this is the up portion. This is what has changed the trend line color. This is the sellers trying to fight it back. And we may come back with a buy signal here now, which would not be that unusual if the market is kind of stuck in a trading range today. No, the trend line has turned over again. So essentially what we're looking for in a signal is confluence of the signal. So where the trend line keeps flip-flopping back and forth like this, there's no signal. Filter keeps breaking up like a checkerboard, there's no signal. But here, the trend line changes color from red to green. Market comes up, comes down, everything is still green. So we generate a green signal, green trend line, green filter. That's a buy signal for us. And you can see that had some pretty decent follow through as well. I thought for sure we would see a little bit more action to the upside this morning, but maybe not. All right, a real quick overview of the Eagle now, the Eagle Trend Trader. We've got this band on here, and this is our directional bias. So when the soft edge is above the hard edge, this is what we refer to as the hard edge, we are looking for buy signals, and vice versa. Now that it's turned over, we're going to concentrate more on sell signals. This red bar buy signal right here, this is a very strong signal when it comes to the Eagle. Essentially, any signal that originates out of the hard edge tends to be a strong signal. The red bar buy, pretty easy to spot. Red bars, but we get a buy signal. So we get green warning dots, green triangle, and hash mark. And you can see this is the signal that was right out of the gate this morning. That's the one that had that follow through to it. And then there's also your basic with trend signal. See, here's a with trend signal off of the hard edge. Everything is all green, and that too had some decent follow through. Here's another red bar buy just before it. And here's the eagle where the market is all choppy. And again, you can see there's no signal, no follow through. And I'll address the Raptor real quick here. The Raptor, this is the latest addition to the DTS family. It incorporates elements of the other three trading tools. The Raptor has elements of the Hawk, the Eagle, you can see the Eagle band in here, and the Falcon. Oh, I was just going to try to get in on this signal right here too. Come on. Are they going to give me a chance? Or are they going to run away? They're going to run away on me. With the Raptor, we're using a different order tool. This is a very late signal off of this signal here. I'm very, very late on this one. But I just want to demonstrate this tool to you. This is the Trailblazer, and you're going to notice the biggest difference between the Trailblazer and the Trade Manager is that the Trailblazer does not have this risk component to it. So you need to know more or less what your position size will be when you're using the Trailblazer. The nice thing about the Trailblazer, though, it's a one-click system. You saw how I was using the Trade Manager this morning when the market was moving so fast. On one of those signals, the market actually bolted and I didn't get a chance to get in. The Trailblazer, I simply would have had to hit the buy or sell market buttons. I would have had my, well, I don't have my stops enabled yet. Let's enable my stops. I would have had my stops, I would have had my profit target, I would have had my break even. Everything would have been there working for me simply on the click of a button. Now, just because I happen to have the Trailblazer here on the Raptor does not mean you cannot put the Trailblazer, say, on the Hawk Scalper or the Falcon Swing Trader or the Eagle Trend Trader, even for that matter. And likewise, it does not mean that you cannot put the Trade Manager here on the Raptor. Now, as far as the Trailblazer and Trade Manager go, we have 16 different stop strategies to choose from here. And each strategy is fully customizable. So right now I've just started with the swing high system. Let's say I wanted to see what the ATR was like, and I want to adjust it to a 3-period ATR. I can preview that. So you see these orange hash marks. I can preview that to see whether or not that's a system I would like to employ. And if it is, all I have to do is click accept, and that will now become my new stop strategy. So very, very powerful piece of equipment. I'm just going to let that go for a moment. Oh, here, you're probably wondering what the heck is this dial thing on here? This is the Geiger counter. This is the latest tool from Indicator Warehouse. And what the Geiger counter does is it shows you the time and sales. It's a visual of the time and sales. So you've got a histogram here. You can see how the time and sales are unfolding. What I also really like is this dial around here. So the dial shows you the current buying and selling pressures. So right now when the dial pulls hard over and holds, then that shows you that there's a whole lot of buying pressure there. And vice versa, if it pulls over hard to the downside and holds, that tells you that there's a whole lot of selling pressure there as well. All right, so very helpful tool. Now you can see that the needle is all green. So again, that just exhibits a whole lot of buying pressure in the marketplace. And I'll point out the trades that look promising as well, folks. Some of these trades that I'm putting on here this morning, they're just for demo purposes so I can show you how these tools work. But if anything looks really juicy this morning, I will let you know. People sometimes say, Eric, why did you take that trade? Well, it's a demo room this morning, so I'm demoing how the software works as well. All right. So Mimo was asking about the DAX. So let's bring the DAX over here. And Brian, I'm going to get to your question here in just a moment too. Okay, come on. There we go. So here's the DAX now on the Hawk. And you can see we had a pretty good rally here out of the DAX. We had our first micro-macro cross signal here just prior to the open. The market pulled back, gave us a macro pullback signal, which is another one of our high probability signals. This signal here, this macro pullback, was spoiled by the yellow bars. With the Hawk, we actually don't take yellow bars. Actually, I shouldn't say that. The only signal I'll take off of a yellow bar is a 4-arrow consolidation signal. But this was not it. Then we came back with yet another first micro-macro cross signal. Now, you're saying, well, wait a minute, Eric, the trend lines didn't cross over. But the principle of the first micro-macro cross remains the same, namely that everything goes out of sync. So our filter goes out of sync, bar colors are out of sync, trend line is out of sync, and everything comes back into sync. That's what makes that a first micro-macro cross signal, and that's what makes that very, very powerful. Now, I know you're thinking to yourselves, how in the world do I know which signals to take and which signals not to take? Well, we have a cheat sheet for the tools, and we review the signals every day in the trading room. So with your Hawk, you're really just looking at these 5 basic signals. So our first micro-macro cross signal, the macro pullback signal, which is a signal where everything is in sync except the micro trend line. A 4-arrow consolidation signal. You can see 1, 2, 3, 4 arrows. We expect the market to rally off of the 4th signal. A post 4-arrow consolidation signal, which this one also happens to be a macro pullback signal. And then we have our red bar buy, or the bearish counterpart, the green bar sell, which occurs when the market is later in the market stage and things might be starting to decline. With the Falcon, yes, I finally got around to making a cheat sheet for the Falcon. We have our trend change signal. So for you Falcon owners, if you don't have the cheat sheet yet, you can write me and I'll send it to you. So we have the trend change signal where the trend line changes color. Essentially, it's our first signal where everything is in sync. So we've got red bars, red filter, red trend line. Then we have the late filter entry signal, a very high probability signal. Filter goes out of sync, comes back into sync, but the trend line never changes color. That's a very high probability signal. And then we have our basic trend line touch signal, where the market just retreats into the trend line, touches it, comes out with the signal, and again, everything is in sync. All right, so that you can see there's not really that many signals that you need to worry about. All right, so there's the DAX on the Hawk. Let's take a look at the DAX now on the Falcon. Actually, the DAX a lot less volatile this morning than what we were looking at in the NQ. Here's the trend change signal, right? Trend line changes color. Here's our up portion. There's the down. Here's the up. Everything is in sync. That's a solid buy signal with the DAX. Here's another trend change signal. Trend line goes from red to green. Here's our up, here's our down, here's our up, and everything is in sync. And again, good follow through. Now we're getting a trend change to the downside, right? Trend line changes color. Here's the down, the up, the down, there's the signal, and there too we've hit our profit objective. So if I set it up like that, you can see no problem hitting our profit objective. These lines that you see on here, I should point these out real quick. This is a system add-on. This will work on any chart. It is not a part of DTS. This is the Ultimate Support and Resistance Suite. It's an assortment of 21 support and resistance lines forecast for today's trading. And they're not Fibonacci levels. They're not pivot points. I like to say they're much better. And they actually do a pretty good job of containing the market for the most part. You can see the market did blow past the secondary support line here earlier, but it did find a little bit of support there. And here we are flirting with the line again. So there's the DAX on the Falcon. Here's the DAX now on the Eagle. So we got our trend change. We got our trend change signal right here a few minutes before the market opened. Came back with a hard edge bounce signal right here. Trend was not very long, but I do believe it was far enough to at least hit our first profit objective. Oops. You see, the trade manager, because I'm risking 2% of my capital, will not allow me to take a trade I can't afford. See that? Comes back and says, nope, sorry, Eric, you can't afford that one. So let's frame it like this. Yes. So you can see we hit our high probability profit target. And this happens so often that the market will hit our high probability target, and then it will either stagger a little bit or even just give us a full out reversal. So it's amazing. It still amazes me how often the market will hit its high probability objective and then turn around. Here at the moment, we're waiting for a little bit more structure before we get a signal. So we'll see the market, the cloud has just changed over. We're trading back into this Eagle band, and we'll see whether it generates a sell signal out of that. And last but not least, a real quick look at the DAX on the Raptor. And I've got my ultimate support and resistance lines here on the Raptor also, so you can see. Nice trend change signal here. So the clouds cross over, right? They drift back into the band, and the hard edge comes out, generates a signal, rallies up a little bit. Would have hit our break-even target. We would have been stopped at break-even probably on this one, unless you took profit up here, took some profit anyway. Market comes back down into the hard edge, comes out, generates another signal. Hard edge bounces on the Raptor are very important signals. And you can see that signal have much better follow through. Prices come down, they take a bounce and fail. This is what we refer to as a soft edge sell. Very strong signal for the Raptor also. And you can see that had some decent follow through. The clouds are crossing over. The market comes back into the cloud. We're looking for some support. So it looks like we're going to generate another sell signal here with the Raptor and probably see the market continue lower. All right, so there's the DAX. Brian was asking, Eric, you mentioned yesterday that your profit target on oil has been increased from 20 to 10. How do you determine that? Well, yes, that's true. How do I determine that? by the volatility of the market. So crude oil, if we're trading the hawk, where we typically have a $50 objective per contract, 5 ticks in crude oil is nothing, right? I've seen crude oil slip 5 ticks when it's very, very active. It's very likely that crude oil will give you 10 ticks on a trade or off of one of our signals. That's why I've actually doubled the profit objective for crude oil. If you're trading the Russell is another market that tends to give you a little bit extra. You could certainly double your profit objective on the Russell as well. All right, so while I was yakking there, we actually saw some pretty decent moves. Darn it, I wanted in on this one here, this trend change on the Eagle. So you can see the band chain turned over. Market came down, went into the band, found some support there, signal came out. We actually would have taken the signal right here. Let's roll this over so we pretend it's real time. Okay, so we've generated the signal, but we're currently against the ATR. We use this as a bit of an added filter on the trade. This bar flips the ATR over, so this effectively becomes our signal bar. So you can enter below the low of that bar. And honestly, I'd probably try to cover it above the high. And you can see very good follow through off of that signal. So what we do with these tools, you can see, well, you might be saying, well, Eric, why didn't you take this signal here? Or why didn't you take, that signal there? What we're doing is we're trying to hold out for the highest probability signals. That's what this whole cheat sheet was for, what we refer to as the cheat sheet. You can see, there's a signal here, and you might be saying, well, Eric, why didn't you take that signal right over here? It's because it's not our high probability signal. We're going to hold out for the highest probability trades. We don't need a lot of trades. We just need to be right on the trade. This is something that a lot of people get confused about. They think that in order to be successful, they need to trade a lot. And no, that's not the case. You need to trade with your correct position size. You have to take the appropriate number of contracts when the trade presents itself. But you don't need to trade often. In fact, I like to share with people, if you traded just twice a day for $50 a target, so essentially you're making $100 a day, or trade once a day for $100. If you traded 25 contracts, you'd make $500,000 a year. Now, I know you're saying, well, I can't afford 25 contracts. All right, well, what if you traded 5? That's still $100,000 a year. Can't afford 5? What about 3? That's $60,000 a year. All for either 2 $50 trades or one $100 trade a day. So can you see how the math works? You don't need to try to scalp a dozen times a day. You just need to scalp 2 or 3 times, but size your trade correctly and you'll make all the money that you want. I shared with you guys a story before. This fellow who came to me for coaching, when we first spoke, he wanted me to show him how to take 100 trades a day. Because in his mind, that's what a scalper does. He takes 100 trades a day. And I said, you will never be a successful trader taking 100 trades a day. I could show him how to do it. It's actually quite simple how to do it. Here, I'll build you a chart and I'll show you. I'll build you a NASDAQ chart and I'll show you how you can take 100 trades a day. Bear in mind, you'll never be successful doing this. bit just for giggles. Okay, there you go. There's a 30-second chart. You want to take 100 trades a day, and the market's in a downtrend, just sell every red bar. It looks easy. Don't get me wrong, it looks very easy. It's very difficult to do, especially when the market starts doing this. It starts chopping all over the place. It'll drive you crazy. You'll get so jacked on coffee and cigarettes, your heart will explode. All right, so the market's settling in a little bit. Oh, Rob asks, yeah, like Michael says, you do that, the only person making any money is the broker. And that's an excellent point, Michael, because even though commissions and exchange fees have come down a lot, they are still a considerable expense, right? We've got to we've got to pay for these things. So if you're trading 10 times a day, even if you've got a broker who's got a $4 round turn, by the time the commissions and fees are on there, you're still going to blow, $100 on exchange fees and broker fees and commissions and whatnot. No, that's a very good point, Michael. Thanks for pointing that out. Rob's asking, do you have a cheat sheet for the Eagle? No, sorry, not yet. But like I said, in the room, we go over the signals every single day. What I've been waiting for is a day where I can identify all the signals on one chart instead of, having to print one here and show you one there. Actually, this one's not bad. We've got the red bar buy. We've got the hard edge bounce. If there was one more red hash mark, and I could probably draw one in here. We'll pretend. We would have a rule of three. Oops, wrong tool. We would have a rule of three signal, which is our counter trend signal. Actually, that's not bad. These are our three basic signals on the Eagle. So the hard edge bounce, when you've already got an established trend, or when the trend just changes. That's actually the other one, is the trend change signal. That's actually pretty close though. So the hard edge bounce, the red bar buy, and the rule of three counter trend signal. So the rule of three means that we're printing three signals against the trend. So the band is bullish, but we're printing three sell signals. The rule of three must always be preceded by a test of the highs and a failure. Obviously, if this were a downtrend, it would have to be a test of the lows. Now, this is still a rule of three signal, even though we only have two signals against the hard edge. So we have this one and we have this one. I would have still shorted here. Come on. I would have still shorted here because it does have all the parameters of a rule of three. We've got the signals printing against the hard edge. We've got the test of the highs and the failure. Sometimes the rule of three will only signal twice. Sometimes it will signal three times. Sometimes it will signal four times. But the all-important thing is that you've got this retest and the failure. Now we're against the ATR here, so I would let the ATR turn over. This would become my signal bar now. And because I'm suspecting that there may be one more sell signal print here. I probably risk my stop up to here. But you can see it was no problem falling off and hitting the profit objective. And like I say, we go over these signals every day in the trading room. Oh, and look at this. Just as we hit the profit objective, the market it turns and stalls a little bit, heads a little bit higher. Happens so often off of our high probability targets. And same thing for the Raptor. I'm sorry, I don't have a cheat sheet for the Raptor yet. I will do one as time permits. But again, we go over the signals all the time in the trading room. Wow, getting a considerable retracement going on here. I think we're finally going to see a little bit of a rally again after this monster decline. Mike is asking, hi Eric, good morning. What is the support line that was printed? Is that an add-on? Yes, it is an add-on. This is the Ultimate Support and Resistance Suite. And as I mentioned, it's an assortment of 21 support and resistance lines forecast for the current day's trading. The gold line is your median line. The blue lines above and below are primary support and primary resistance. Generally speaking, these three lines kind of set the tone for the day. If the market is trading below the primary support, the market tends to be bearish. Or pardon me, if it's trading below the median line, the market tends to be bearish. If it's trading above, it tends to be bullish. If it gets past the primary support, you can usually expect it to move two zones. So if the market breaks down below here, you can see we tried to break down and recovered a little bit. But if it breaks down below here, we could probably expect it to trade down to here to 39.82. And likewise, if we break to the upside, we'll probably see a trade to 41.54, although that does not seem so likely today. But you can see that the support and resistance suite does a pretty good job of containing prices, or at least telling you where support and resistance is likely to occur. So here we get a trend change signal with the Falcon. The market comes down, comes up, bounces off the median line, produces a signal. If you didn't want to use the high probability profit target as your target, you could certainly use your support and resistance suite. So let's say we chose to enter here off of the signal. We're going to place our stop loss, say, above here, and we're going to use the support zone as our profit objective. This is what Omar El Tuki likes to do. Actually, Omar gets even a little bit more aggressive. He'll use the median line to cover his trade. He'll put the median line there. He'll use primary support as his profit objective. And you can see, you know, the results can be amazing. That's a huge trade. A $900 trade on 2 contracts. You don't need to do that too many times in a day. But yes, this is an add-on. It will work on any chart. It doesn't matter if you're watching a 5-minute chart or a range bar chart or a tick chart, whatever. The nice thing is that, but it is only intraday. Sorry, it's not end of day. So if you're looking to use it end of day, it won't work. Okay, we're getting a couple interesting signals here now. We are getting a green bar sell, which I told you develops at the end of the trend. A lot of yellow bars through here, so this is a little bit concerning, but I'm going to place the trade something like that. No, are they not ready to rally yet? Well, we'll see. We'll see if they recover to the downside. Well, there they go. Okay. What I was going to say about these yellow bars here on the hawk, when you get a bunch of yellow bars starting to print, and they more or less print on the same latitude, that's an early warning that the market is going to enter a little bit of a sideways trading range. That's why I was considering, okay, if it's going to rally, I'll take it above the highs here. I didn't want to get in too early on that trade. But it doesn't look like the buyers are able to muster much of anything today. Okay, here's a macro pullback signal now on the hawk. I'd probably try to cover it. Oops, see, you ran away on me while I was explaining stuff. I'd probably try to cover the trade above here. We're getting a second chance at the macro pullback. So you see we've got the warning dot. Don't have the triangle hash mark yet, but I can anticipate where it's, oh, doggone it, that's twice it did to me. I can anticipate where it's going to print these numbers here, these shaded numbers at the end of the bar. These are called my logic counter. Hazards of a trade room moderator. You start missing out on trades when you're explaining things. So with the logic counter, I could tell that that's where the low of the bar would be, and that's where the hash mark would print. It prints one tick beyond the low, and I could place my trade like that. Would have hit the first profit objective. Oh, darn. Would have got us on break even at the rest of the position. Here I'm trying to run a trade today. Maybe I should just look at taking my profits all in, all out. All right. The market's in a little transition. All right, here we're getting our first micro macro cross now on the hawk. I don't mean to be focusing this much on the hawk this morning. It's just that as a rule, the scalper is going to tend to give you the most signals because it is a scalping tool, right? So you see we're getting quite a few yellow bars through here. Oh, this first micro macro cross drifting quite a bit, and now we're into yellow bars. Are we going to get a red bar buy? No, still in yellow bars. That may well work out, but I just don't trust the yellow bar signals. Here on the Falcon, we're about to print a trend change signal, and we had a nice little bounce off of the primary support. And look at what happened. The signal did not print. So we had the warning dot. It was looking like the signal was going to print off of the high. So I was anticipating the triangle and hash mark, but it did not print. All right, here they come again. Mike asked me something about what was the number you mentioned at the beginning, something about how many days back or something. If you're referring to the support and resistance suite, I think what I mentioned was that they're not Fibonacci levels, they are not pivot points, they're nothing of that nature. These are very customized support and resistance lines. They're actually based on the price action that's been in the market. I'm quite proud of these. These took a long time to figure out, but I'm very pleased with how they work. All right, so here we go. We got another buy signal. Let's see if I get a second push on this one. By the second push, I just mean the signal has engaged, and you saw how the bar floundered a little bit there. So I'm just looking for a second opportunity to get into the trade. kind of like a re-push on the momentum. The trade's still a little bit sideways. You see how the trend line is waffling? It looks a little bit like a roller coaster. That's why I've got my stop a little bit deeper. Now, don't freak out because your stop is a little deeper. And what I'm going to do is what the heck, I'm going to try to run this one a little bit. We're going to cancel the profit target if it rallies up here. I'll use the break-even trigger, but I'm just trading a single, so we'll see whether or not we can run it out a little bit. But let me demonstrate here for you on the hawk because it's pretty easy. People always think, oh, in order to have less money at risk, I have to keep my stops really tight. Well, that's all well and good, but if you encounter a market that chops a little bit, you could end up stopping yourself out. Now, I want you to see what happens here. Let's say we took this signal. Most people are going to jam their stops in really, really tight. But if this market brings you in and flounders even a little bit, you're going to get stopped out. But notice here the risk amount at $330. This is 2% of my trading capital, right? Because that's what I have it set at, 2%. Watch what happens if I put it in a deeper stop. Oops, let's really do this. Okay, the risk is still about $300, right? What has changed though is the position size. I've got fewer contracts in play. What if I chose to run a stop way down here? Well, actually, I can go deeper still, can't I? I can probably place a stop way down here, and my risk is still going to be about $300. Well, which trade has the greatest likelihood of success? Well, obviously the one with the deeper stop. So if I know that my risk amount never changes, why would I not run a deeper stop and give the trade a better chance of working out? Right? I'm not going to keep my stops right here really tight and try to strangle the trade when in fact I can afford to leave my stops way down here. Right? Very important concept. Okay, so they ran up a little bit there from that macro pullback signal, hit our profit objective, turned around, now they're coming back. So it looks like we've got a market that's really stuck in a sideways range today. We'll see if we can't get a decent signal here somewhere. What's going on in crude oil this morning? Here's crude oil. Normally we're looking for crude inventory, but that's not going to be until tomorrow. And wow, crude oil trading at $27 a barrel. Unreal. Possible trend change signal here to the downside. So we've got the down, here's the up, and we're coming back with the down, and I think I got the wrong contract month here up for crude oil. 1 second. Are we still in February for crude, or have we moved into March? Yeah, Ray says March. I think you're right. 1 second. Ray says oil inventory is today. Is it today, Ray? Because normally on the holiday weeks, they push it over to Thursdays. Oh, I better double check. That could explain why it's a little bit quiet in crude oil. I'm just checking the indicator warehouse economic calendar, and no, you guys are right. They've posted crude inventories at 7:30 today. Sorry, that's 7:30 Pacific. I wonder why they did that. That's a little odd. Normally, like I said, they push it over. They push it over until the next day. Okay, so the crude oil charts are just loading. I'm getting the March ones up there. And then we'll take a look at those. Come on. Sammy, good question. Sammy says, should we enter a trade after the hash mark bar is finished or before? The hash mark will only print when the bar finishes. So let's find something here. Everything is kind of running again. So while this bar is forming, we only have the warning dot. Then when all the trade parameters are met, and they won't be met until after the bar closes, we'll get the triangle and the hash mark. Now the hash mark is only a suggested entry point. If you're looking at this and you're saying, gee, I wonder if the market's going sideways, maybe I'll enter below the low. You know, that's definitely an option available to you. Or you might say one of the strategies we use in the Eagle is what we refer to as a second push. So let's say you're looking at this green bar sell, and or let's say you're looking at this, because this is starting to look like a trend change signal or a hard edge bounce. Sorry, let's do it like this. Okay, so the market comes, cloud narrows a little bit, gets a little bit wider, all of a sudden we're producing a sell signal. But you're not sure. You're looking at this and you're saying, well, maybe that's just a retest of the low. Maybe the market's going to head higher from here. So if you're not sure, you may choose to wait for a second push entry. And all that means is we're going to let the market engage the signal. And almost always, after it engages the signal, there's going to be a slight hesitation. If you take a look at any of the bars where the market engages the signal, you can see a couple bars later, there's a little hesitation. Right? So here's the signal, the market engages, goes down a little bit, market hesitates a little bit. Here's a signal, market engages, hesitates a little bit before it keeps going lower. So you can anticipate that. So here's the signal, the market engages, there's the hesitation. It's only a couple of ticks from where the hash mark would have printed. So now that you know where the market's current range is, you can say, well, I'll enter below the low of that bar. And because you know where the range of the current market is, you could probably even get away with a tighter stop. And now what you're looking for is you're looking for renewed momentum on the next bar or two to bring you into the trade. So there it goes, there it goes. And by this point, you can say, no, the signal wasn't ready to go yet, so I'm going to cancel the trade. Now, does that mean you cannot take the trade right on the hash mark? No, of course not. But if you're going to take it right on the hash mark, you may want to consider the possibility that the market, may make that little hesitation move, and therefore you're not going to place your stop really tight. You're probably going to place your stop a little bit looser, certainly above this swing high, maybe even a little bit extra in case it tries to reach back a little bit, which in this case is exactly what it does. Now at this point, when the market has shown you that it's recommitting to the trade, now you can start saying, okay, I'm gonna start rolling my stops in. And so maybe you'll take your stop from here and you'll roll it to here above these highs. And then as the market starts to head lower and get back down here, now you can say, okay, I'm going to get a lot more aggressive. Maybe go to a parabolic strategy or a bar high low or something. And then if the market gives you a little bit more room still, you may say, well, I'll just snap the trade to break even, or maybe I'll back it off a little bit, try to ride out this swing. And here again, the sellers have recommitted. And now you've got a little bit in your trade, so you can hit your break even button, get your trade down to break even. And now if they go, they go, and if not, okay, they stopped you at break even. So you would be looking for the next signal to get in. But yeah, that's a really good question, Sammy. See how the market is now, folks? We've got an obvious sideways range going on. So what we want to do is we're pretty much not going to get a decent trade until the market gets outside of this range. There's just far too much overlap. There's no real commitment here. If I had to choose, I would probably short, because it's usually easier to sell a market than it is to buy it up. But like I said, so long as we're in this sideways range, we're not going to get a decent signal. Well, we'll get signals, but just be aware that there may not be very much follow through. Yeah, great. David says, I'm liking the two cloud setup on the Raptor here, where we've got the double band. Working on a hard edge bounce here. This may also turn out to be a failure, though. All right, let's see if we get that hard edge bounce. There it is. So you see now, all I had to do is hit the buy market button with the Trailblazer, and automatically I get my profit target. I don't have my stops enabled. Let's enable my stops. We'll start with the swing high low. I'll enable them. And I automatically have my stops. I have my profit targets. I've got my break even trigger. That's the beauty of the Trailblazer, right? It's just a one-click system. And again, I can adjust my stops as I like. We'll see if maybe they can get above these highs here. If we can get above these highs, if we can see the market settle here around the 40-55 area, and then I think we can see it definitely move a little bit higher from here. At the very least, I think we're going to see it retest the top end of the trading range. All right, what I should do is I should show you the crude oil now. A lot of times we'll look at crude oil going into inventory, and we'll play with the OCO function. So the OCO function stands for one cancels other. And with the OCO, a lot of times what we'll do is we'll bracket the range. If there's an obvious range to the market, we'll bracket the highs and the lows. Now with the OCO orders, you need to be aware that these orders are live the moment you put them on your chart. So I tend to put them away and then pull them into where I want them to be. Now this, how I have this set up, folks, this is ultra aggressive for crude oil. All right, inventory should hit the floor any moment now. We're actually working on a late filter entry signal. You see that? The trend line is still red. The filter is out of sync. We'll see if it comes back with a sell signal here without changing the trend line color. That would be a late filter entry signal. Currently trading off the primary support. Oh, I don't see anything happening here. You know what? I'm going to go to the source. I'm going to go to the government reports. EIA.gov. Because I think whoever programmed that website didn't take the holiday into account. Because there's no way, yeah, it's 7:31. There's no way that the inventory report has been released. But I get to show you the OCO function anyhow. So what I'm going to do is we're going to bracket this last bar. We'll see which way this bar breaks. Oh, come on, where are you? Ah, there it is, release schedule. All right, so once this OCO function engages, what you're going to see is that the market is going to cancel the other order, and I should get my stop loss and profit target set based on what my parameters are. Yeah, inventory is coming out tomorrow. So here's the EIA website. This is from the horse's mouth. So because of Martin Luther King Jr., the inventory is going to be Thursday at 11, just after the natural gas inventory. So when in doubt, go to the source. All right, so we got filled to the short side. Here on the OCO order, you can see that the buy order canceled. This is actually working on a late filter entry signal too. So you see the filter went out of sync, trend line never changed color, and now we have our entry signal, our triangle and hash mark. So you could sell either on the hash mark, or we have an opportunity to take a second push off of this current bar. Ryman's asking, what is the name of the indicator that shows the fat price bars? That is the dynamic equivolume bars from Indicator Warehouse. And the dynamic equivolume bars, they have a volume component built into them. That's the beauty of equivolume bars, is you can see these, as the bars get wider, that means that there's more volume associated with that particular bar. And what a lot of people find strange is that when the market is trending, the bars are thin. Well, it's because there's very little activity. No doubt you've heard the market referred to as an auction. Well, if you've ever been to an auction, you know that, when the auction first starts, and let's say whatever they're auctioning off, a car or a piece of furniture or whatever, the auction always starts rather quickly. The auctioneer starts at $50, somebody bids 50, somebody bids 60, somebody bids 70, somebody bids 80, and they go and they go and they go and they go, and all of a sudden they're up to $300, and things slow down a little bit, right? Because now people are humming and hawing, $300, $300 once, $300 twice. Well, that's what's going on here. 28.36 once, 28.36 twice, and they're rallying up a little bit, and now they're getting more sellers, 28.60, 28.55, and so on. So long as the bars are thin, that actually shows you that a market is likely to trend, believe it or not. But when the bars start to get fat, that's showing you a lot more interest, and you're always going to see fat bars where the market turns. So wherever the market starts to turn around, you're going to see fat bars. So that's a little bit of a clue for you. And it does appear as though crude oil is going to slip a little bit lower. All right, so I hit the break-even trigger, and the market took my stops from up here, where they've been trailing, snapped it down to break-even. What do we have in open profit here at the moment? Oh, about $150. Like I said, the bars are still thin, so it looks like they might taper off a little bit more, perhaps. David's asking, how do you turn those on the Raptor? Very simple, David. I will show you. And you can do this for any of your tools, whether it be the Raptor or whatever. You're going to go here to your data series, and you're going to find the dynamic echo volume bars with your chart style. So once you load them onto your NinjaTrader, they'll be in this chart style assortment. This too is an add-on. It works on any chart style. So, well, any chart style with the exception of chart styles like point and figure, volume bars doesn't work on volume bars because with a volume bar, every bar is already the same size, right? But it will work on time-based charts. It will work on end-of-day charts. It will work on tick charts. So a lot of useful information there. Yeah, David. David says I only have the standard Ninja choices. It's an add-on, David. It doesn't come standard with the Raptor. Mike's asking, can you explain the logic counter again? Absolutely. What the logic counter does is it predicts where the current bar will finish. It's again, this is an add-on, but this comes standard with DTS. And what it does is, you see how I'm getting these warning dots here? Let's say I wanted to short off based on this warning dot. I know that the bottom of this bar will be 40.16.5. So I know because the logic counter is 40.16.5 that the hash mark will print one tick below the low. So I can actually anticipate that, and I can set my entry order where I know the hash mark will print. It will work on any range style bar. I'm using the Indicator Warehouse Mean Renko bars. And it's a very helpful tool in that respect. So again, you see here I'm working on a possible late filter entry. I've got the warning dots. Everything comes into sync. I can anticipate where the bar will finish. So I can actually set up my trade before the signal prints in anticipation that if that bar does close at the bottom, I know where the low of the bar will be. So very helpful little tool in that respect. And Lilo says the NQ has collapsed and the ES is down 6 points. Yeah, it does seem like it's that type of day. We've got the problem today, though, is I think we may have seen the move of the day already, folks. I'm not sure we're going to get a whole lot of recovery out of this market right now. starting to flatten out a little bit. One thing with these late filter entry signals as well, and this is true for a lot of the signals, you don't want to see them print too frequently. So we've got a late filter entry, we've got a late filter entry. It's still a strong signal, but what I might choose to do instead of taking it right on the hash mark is take it below the lows and maybe cover above the highs. Look at this. We're getting another series of dots, and you can see I knew exactly where that was going to print because of the logic counter. Sammy's asking, what can we anticipate? Please repeat it. Just where the bottom of the bar is going to print, Sammy. With the logic counter, I can tell you that the bottom of the bar will be 40.13 half. So if I'm, well, here we're printing warning dots to the upside. This is actually a reversal signal. So let's say I was anticipating, where will the market print the triangle and hash mark based off of this warning dot that I'm getting? Well, here's a warning dot now to the downside. I know it's going to print at one tick below the low, or in this case, one tick above the high. So if I know the high is 40.18 half and I wanted to buy it on a rally, I could already set my order at 40.18 3/4. So we're just talking about the logic counter, these little shaded area right here. So you can see the market kind of flattening out a little bit, right? It was very steep there, very steep here. So, a lot of really good momentum to the downside, but now it's kind of flattened out. So this little move to the upside, not that much of a surprise. That is one thing that I have to say I really like about the mean Renko bars. It's much easier to see the price action than, say, off of a 5-minute chart. All right, so I'm sorry we kind of missed a couple opportunities while I was explaining things this morning, but hopefully you got a pretty good idea of how the tools work. You can see we're into the hard edge now on the Raptor and the Eagle. The Geiger counter is pulled hard over. My goodness. They're just chewing through those orders. Right, so a little bit of conflict in the signals. We're getting a first micro-macro cross signal now on the Hawk. A little bit late. Normally we anticipate that to print a little bit closer down here. It is still a first micro-macro cross. So here, if I were anticipating the hash mark, I know it's going to print at 40.31 because it's actually going to print 40.31 quarter, one tick above. So just by knowing where the top of the bar is, I can place my order just one tick further. And what I would probably do is I would probably run a stop down here because this may well turn into a macro pullback signal. All right, so the first signal did not engage. More hash marks, or pardon me, warning dots. Now we're into a macro pullback. You see how the trend line has changed color, the micro trend line. And this again is on the Hawk. We're going to get a comparable signal here on the Falcon, and as well as the Raptor. Working on a possible rule of 3 signal here with the Eagle. Now it's still early. We're actually generating a hard edge bounce. So we're getting a couple of Interesting signals here off the eagle. We're getting a with trend signal, which we could take, on the second push. So in other words, we've got green bars bouncing off of the hard edge. We've got the signal. Prices are retreating from the signal, so we can take it on what we call a second push. In other words, we're looking for that renewed momentum to bring us into the market. And here on the Falcon, it looks like we may get a late filter entry signal. The filter currently out of sync, the trend line still in sync, but just barely so. Oh, is the filter going to fall out of sync? There you go. So the filter has now fallen out of sync, so any signal there has been negated. And with the Raptor, let's see what we got going on here in the Raptor. A little bit of a hard edge bounce. We just printed a signal here on the Raptor now. Cloud's a little bit of a mess. We're almost getting a cloud crossover here now with the Raptor. So we've had a retest of the lows. If we come back with a buy signal here, that would be a soft edge buy for the Raptor. Now what I've done is I've placed my buy order here. There's the buy signal. Oops, want to drag it in now. So here's the soft edge buy. And I'm going to place my stop, my initial stop, kind of deep. And what I'm going to do is I'm going to roll it right down here. Just because the market's going sideways, and I'd like to show you how the trailing stop mechanism again. If I can get them to tick higher. This is why I said to you, when the market's in a sideways range, the best thing to do is just let it get outside of that range, and then you can trade it. So up here, we had a little bit of a sideways range. It looks something, I guess, something like this. When the market eventually emerges from the range, it will retest. And that's what we want to look for. We want to look for this retest, and then the market will come back with a signal, if in fact the trade is going to continue in the direction of the breakout. To take it within this range, very, very difficult. To take it on the breakout, very difficult, because about 75% of all breakouts fail. So the thing to do is let it break out, let it retest, and then look for that opportunity to get in. So here the market is broken out, it's retesting, it produces a signal, and then you can get in with a little bit more confidence. Compare that to where we are right now. We're kind of in this great big trading range. It looks something like this. It's not to say the signal won't work out, but it's a lot more difficult to take this type of trade than if we let the market, well here, we'll just cancel this, than if we let the market break out, retest, and then produce a signal for us. That's what you want to wait for. But like I said, this is also partly a demo room, so it would be very boring if I wasn't able to at least show you something. All right, so they're kind of floundering a little bit there, trying to sort themselves out. You can see our Geiger counter very neutral also. So we've got the market waffling back and forth. They're pulling hard. Oh, they were pulling hard there to the buy side for a moment. With the Geiger counter, and again, this is one of these add-ons that will work on any chart, not just a DTS chart. But when you see this dial pull over hard and stick, that shows you that there's a lot of buyers or sellers chewing through the orders. Right now it's pretty even. You can see it waffles a little bit to the buy side, comes a little bit over to the sell side. No real commitment, which is kind of par for the day. Mike is asking, what are the 4 different moving average lines on the Raptor? These are the trading bands that we actually borrowed from the Eagle. But one of the Raptor owners discovered that he got very good results if he put 2 bands on. So we've been running 2 clouds on the Raptor. So what we're really looking for is we're looking for hard edge bounces, and we're looking for failures off of the hard edge bounces. Those are your most probable Raptor trades. So here's a hard edge bounce off of the first cloud, and it should probably see the market try to get down here and at least retest the lows. Oh, the green lines, this is also an add-on, Mike. This is the initial balance lines from Indicator Warehouse. And the initial balance lines, they're just there to show me the high and the low of opening range. Why is that a big deal, you say? Well, a lot of times the market will respect the highs and the lows from that first half hour of trading. So the initial balance lines show you where that is. So once the market has kind of broken below here, it helps establish that bearish tone. If the market comes back, you can anticipate that there's going to be some sort of resistance here at this 40.39 area. And if they happen to get back in here, they'll be hard pressed to get back to the high of the day, which will be somewhere around 40.91 or just shy of it. And then these are the clouds, which are the borrowed from the Eagle Trend Trader, which are part of the Raptor system. Good questions, though, folks. All right. Yeah, it's just a funny sort of day today. I'm looking at gold. Gold has done nothing but track sideways today. Here's gold on the Eagle. So whenever you have a market that's very range bound, you don't have a defined trend. It's not like it starts there and goes there. It's down, it's up, it's down, it's up. Very obvious that we've got a sideways market. Filter all broken up. Not a whole lot going on in gold here at the moment. That was gold on the Eagle. All right. Well, I'm sorry I wasn't able to show you some better trades. The trades that we were looking at, the market kind of bolted while I was explaining them, but oh well. That's how it goes sometimes. All right. Well, it looks like there's still in a tailspin. So we'll see if we get another move here into the band. Maybe we'll get another hard edge bounce. See, here was that late filter entry signal on the Falcon. So you see the filter went out of sync, came back into sync. Very important, it has to come back into sync. Trend line never changed color. Very, very high probability signal right there. Signal that you can take with a great deal of confidence. All right, well, if there aren't any other questions, I think we may button things up for the day. It's at the, we're nearing the top of the hour. And I'm not convinced we're going to see any really big opportunities right now. I think the market is, like I said, kind of floundering a little bit. Well, sorry, not floundering. It's definitely in a downtrend. But we need to see a little bit of a retracement before we get too excited about taking another short. All right, no questions? All right, you guys. Well, thank you very much for your attendance today and your questions. It certainly makes the day go faster. And DTS owners, I will see you in the trading room again tomorrow morning. And yeah, be careful out there, you guys. It's an odd sort of day today. All right, we'll talk to you soon. Bye for now.